Hey, Renter Retires, this is Adam Schroeder, and this is the market recap for the week of September 12th through 16th, 2022. Before we get started with today's video, let me remind everybody, please subscribe to our YouTube channel, click the notifications bell so you don't miss any of the content we're putting out. We really appreciate the time you have spent educating yourselves. We have loved talking with each and every one of you who've come to us. Thank you so much. Let's get into the recap of what happened between September 12th and September 16th of 2022. And that is, according to the U.S. Labor Department, new jobless claims fell for the fifth week in a row. And despite rising interest rate and the Federal Reserve doing everything they can to slow down the economy, jobless claims beat forecasts. We are seeing continuous jobless claims remain near a 50-year low. Companies refuse to lay off workers due to the tight job market. And the University of Michigan's survey of consumers saw consumer sentiment increase for the third month in a row. Consumers are now expecting inflation to average only 2.8% per year over the next 5 years. This is down from 2.9% a month ago, as well as fits in nicely in that Fed's 2 to 3% inflation target range that they are consistently saying they're trying to achieve. And the median expected year-ahead inflation has dropped to 4.6%. As you know, right now we're in the mid 8% inflation rate, so people are expecting it to drop almost in half over the next year. Now, the Housing and Urban Development reported that single-family home construction declined for the fifth consecutive month, down 10.1% to an annualized rate of 916,000 homes. That is just after COVID started levels. This is likely to come back to bite us in future years in the form of higher prices, since we're already sitting at about a 5 million home deficit compared to housing formations. So look for that to come back to bite us at some point in the next few years. And despite this recent increase in home listings, housing inventory now sits right at the low level of 3.3 months. Now, retail sales came back strong after a 0.4% decrease in July, rebounding to a 0.3% rise. And the U.S. Census Bureau reported that vacancy rates for owner-occupied properties was down to 0.8%, with rental vacancies checking in at 5.6%. And Rent.com reported that the national average rent prices for a one-bedroom apartment now average $1,721, with two-bedroom units renting for $2,054. That's a 27% and 23% growth year over year, respectively. Home prices around the country were up 7.1% year over year in August. According to Realtor.com, the median list price today is $435,000, up 14% year over year, while the average days on market continues to sit right at 42 days. And the second quarter of the year saw home ownership rates in the United States increase once again, where it now sits at 65.8%. This is up from last quarter's 65.4%. And for all the forbearance concerns out there, you'll remember the forbearance bros back in during the pandemic who were so worried about this glut of inventory we were going to get from forbearance. Well, guess what? Just like I was saying, the share of homeowners in forbearance is now at 0.74%, which represents 370,000 homes. This is down from 3.4% a year ago when people were freaking out about this situation. And the 10-year Treasury note now sits at 3.452%, up from 3.314 a week prior. And Fannie Mac reports the average 30-year fixed rate mortgage now sits at 6.02%, up 0.13% from a week ago, with the 15-year note now at 5.21%, up 0.05% from a week ago. The Dow Jones ended the week at 30,822, down 4.2% from 32,151 a week earlier. The Dow Jones ended the week at 30,822, down 4.2% from 32,151 a week earlier. The S&P 500 ended the week at 3,873, down from 4,067, which is a 4.8% drop over the week. The Nasdaq sits at 11,448, a 5.5% drop from 12,112 on September 9th. So that's what happened in the last week. You can head on over to renttoretirement.com and see the inventory we have there that's going to beat all of these stock market returns you're hearing about and are likely to see in the future. That's at renttoretirement.com. You can see the inventory, you can schedule a call with us. We really appreciate all of you who have reached out. Love talking with you and planning out your real estate journey. If you want to get our inventory sent to your phone, not as up to date as the Google Doc on our website, but you can still get them sent to your phone. You can go to renttoretirement.com/hotlist and see it there. Talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.